In this video, we're going to look at UK rental property investment and talk about what is best for investment in relation to the types of property. We're going to consider popular alternatives to each aspect of property and explain which is better for overall investment returns. So, which is better, residential or commercial property? Properties that are already built or those that are off-plan and not yet ready? Low-cost properties or premium high-end properties? When considering residential property, should it be houses or apartments? And finally, should it be a small property or a large one? Which is better? If you haven't subscribed yet, now's a good time. We publish content every week on UK property investing. Hit the bell and like. It really helps the channel and ensures you're notified when the next video is released. So for each of these aspects of UK property, we ask which is better for investment? Residential or commercial property, which is better? Commercial property typically consists of offices, retail shops, workshops, and warehousing, whereas residential property is mainly houses and apartments. Demand for commercial is falling because remote working has reduced the need for office space. High street shops are under pressure from online retail, and more are closing. UK manufacturing is down, reducing the need for workshops, and even warehousing demand, which was high post-COVID, has fallen due to many new builds over recent years. Lower demand means prices will fall, rents will be lower, and risk of vacancy is higher. On the other hand, residential property remains in short supply. New builds each year are lagging behind the annual increase in households. Overall prices and rents are expected to go up, especially on low-cost affordable houses, which remain the best for investment. Off-plan or ready property, which is better for investment? Off-plan property is typically apartments and sometimes houses that are yet to be built or are under construction and are not yet ready for rental. They seem attractive, may come with payment plans, will be brand new and be guaranteed for a period. But prices are inflated and they tend to be leasehold with hidden costs such as service charges and ground rents, which can increase in the future. There are many parties involved and there's a risk of delay, and some projects may fail and may never be built. Ready property, such as existing houses, provide more certainty, have a track record in terms of pricing and demand, can be rented immediately, giving instant income, and there's no risk of delay or development failure. And the properties are normally freehold houses with no service charges or ground rent, so net investment returns are better. Cheap or premium property, which is better for rental? Demand for low-cost houses is high, with higher percentage rental yields. A premium house may give double rent, but is 4 times the cost. So with the same budget, you can buy 4 cheaper houses and get twice the rent in total. For the same budget, there may be more houses to maintain and more tenant issues, but net yields are still much better. The risks are lower as cheaper houses fall less in a recession, and you have more flexibility in that you can sell one and keep the others. Higher demand also means better future capital growth. Cheaper houses make it easier to build a portfolio without mortgages as they're affordable. You buy with cash, save more, and repeat. A premium property that is local may still be okay if you manage and develop it yourself. But for passive investors, for all of these reasons, it's best to buy low-cost houses. Houses or apartments, which is better for investment? Houses are normally freehold. You own the land and the whole property with no service charges or ground rent. Apartments, you lease them, for example, for 99 years and pay ground rent to the freehold owner and service charges for building maintenance. Student parts or hotel room apartments seem attractive with guaranteed rent, but have no resale value. Net rental yield is lower for apartments due to the extra fees, and capital growth is also lower as resale market is limited. You have less development flexibility due to freeholder objections, and lease restrictions may prevent short-term letting. They're harder to resell as most owners prefer houses, but they're easier to maintain and are more affordable, being about 30% cheaper than houses. So for overall better investment return, buy freehold houses. Size of property, large or small, which is better for investment? UK families and households are getting smaller, so demand for smaller terraced houses is increasing as they also tend to be warmer and have lower running costs. Thus, percentage rental yields are higher and they're also likely to grow better in the next 10 years. Larger houses typically cost more but can give good returns by renting to larger families. In cities and prime areas in the south, larger houses could be converted to smaller units or HMOs, especially if you're local and are an active landlord yourself. In other areas, demand for an occupancy of HMOs is low, leading to poorer returns. Buying smaller houses that are let fully to single small families is better, and this is the best option for passive investors. So in summary, in 2026, residential property in the form of existing small, affordable freehold houses is the best form of property investment in the UK. But whichever property you buy, it's important to make sure you own it 100% passively with no tenancy issues, property costs, or landlord liabilities. And here's a message from our sponsor on how you can do this. Thanks for watching. Freehold houses in the north are the best form of UK property investment. They're affordable, deliver higher rental yields, and are growing at 6% per year. And here's an amazing offer from our sponsor.
Reserve any house over £100,000 this month and get 3 years' rent in advance. For example, this large 3-bed freehold house with front and rear gardens, large lounge, dining kitchen, bathroom suite and 3 large bedrooms is under £107,000 with net rent after all costs of £7,490 per year. With 3 years' rent up front, you pay just £86,670, making your net rental yield almost 9%. The biggest benefit is that you can be a 100% passive owner, living anywhere in the UK or abroad. You rent your property back to Find UK Property, and they take care of all the costs, tenant and property issues, and landlord liabilities.
Visit findukproperty.com or call us today.
If you want to invest in property and get 7% net rent, long-term capital growth, no costs or liabilities ever, do nothing yourself and be living anywhere in the world, then consider Find UK Property. They provide 100% passive investment solutions for long-term income from freehold properties starting at under 80k. You get a property that is affordable, fully renovated, already rented out, contractually guaranteed and productive from day one. You become the owner and rent it back to Find UK Property so that they become your tenants and look after all aspects of the property in a fully compliant way. You never need to deal with tenants, estate agents, or do any property maintenance or repairs, or pay for any costs. Find UK Property look after over 2,500 houses, all of which are sublet to their own tenants. And on average, they get more rent from their tenants than they have to pay the property owners. So that way they can cover all the property costs. Their solutions are great for those wanting to retire on pension-type income or gradually build large property portfolios passively in a tax-efficient manner. Please visit the website at findukproperty.com and speak to a consultant today.